I'm Andrew Moran, Liberty Nation's economics editor.
Very, very rocky.
Death by government.
Drain the swamp.
Hello and welcome to another installment of Liberty Nation's Swamponomics videocast. I'm Andrew Moran, Liberty Nation's economics editor. This week, commercial real estate. Is this the next shoe to drop? Tesla Motors and Twitter CEO Elon Musk certainly thinks so. Speaking in a recent Fox News interview with then-host Tucker Carlson, Musk warned that the commercial real estate market collapse will be more like an anvil, not a shoe. He told Carlson, quote, "So the stuff we've seen thus far actually hasn't even. It's only slightly real estate portfolio degradation. But that will become a very serious thing later this year, in my view." Charles Munger, the vice chair of Berkshire Hathaway, recently ignited a tidal wave of speculation over commercial real estate when he said that banks maintain bad loans and could face a nightmare if the mad times come and commercial property prices crater. He told the Financial Times in an interview, quote, "It's not nearly as bad as it was in 2008, but trouble happens to banking just like trouble happens everywhere else. A lot of real estate isn't so good anymore. We have a lot of troubled office buildings, a lot of troubled shopping centers, a lot of troubled other properties. There's a lot of agony out there." But are these warnings from Musk and Munger founded? Most definitely. Today there are about $2.9 trillion in commercial mortgages and $5.4 trillion in outstanding CRE debt. One of the main problems in CRE is that a great deal of commercial loans that are poised to expire this year were originated a decade ago, when interest rates were artificially and extremely low. It is estimated that approximately $1.2 trillion will mature over the next 24 months, and see new lending rates climb as high as 450 basis points. When these loans mature, borrowers will face skyrocketing debt servicing costs. The only solution for when the time comes to refinance is for rents to soar or for borrowers to raise the cash to erase the shortfall. Both are highly unlikely. Vacancy rates in many major urban centers are at or near record highs. Recent industry reports have found that national office vacancy rates have soared 20 basis points year over year to 17% in March. Looking ahead, it has been projected that more than 300 million square feet of American offices will become obsolete within the next 7 years. This is a problem going back to the start of the coronavirus pandemic. Today, there is a widespread problem of so-called zombie offices, meaning that office towers will be unused but continue to stay open and operate. With more Americans working from home and companies adopting remote work policies, commercial real estate has become superfluous for businesses and workers. Leases are being canceled while others are not being renewed. Now, while this is a function of the marketplace, the current situation could be horrific for small banks. Industry data show that small lenders account for more than 2/3 of commercial real estate loans and possess 4 times more exposure to CRE loans than larger banks. Moreover, CRE loans represent about 29% of small banks' assets, compared to fewer than 7% at the big banks. Jeffrey Fine of Goldman Sachs' asset and wealth management business summarized the situation in a recent report, quote, "We've got a big right sizing in the market that we're going to have to confront that is going to be the talk of the next 6 to 12 to 18 to 24 months in our space." But whether the financial markets are talking to themselves another crisis or it is a legitimate threat remains to be seen. Until then, you will need to brace for that anvil to hit your head by stockpiling huge inventories of Tylenol. That's it for me this week. Please read my full Swamponomics column on the pages of LibertyNation.com, where I discuss Americans' concerns of deposit safety, the Chinese economy, and President Joe Biden's debt ceiling fibs. Thank you.
Entertaining, informative, and just plain fun. Watch Liberty Nation's The Conservative 5. Produced by conservatives for conservatives. C5's The Left Free Zone. Hosted by Liberty Nation's Lisa K. Donner. Joined by a raucous, irreverent panel of authors. Deconstructing leftist narratives. Debating the hot topics. And remembering to laugh. Join the official conservative safe space.
You only did that to piss Jeff off.
Liberty Nation's The Conservative 5.
I'm Andrew Moran, Liberty Nation's economics editor.
Very, very rocky.
Death by government.
Drain the swamp.